management. And they invest in founders building transformative businesses across Europe, North America, Asia, and Latin America, and Africa. Um, that being said, I'll excited to turn I've done enough talking for a little bit. Excited to turn it over to these guys to speak a little more. Alex, why don't we start with you? Would love to, feel free to add anything to that intro, and would love to just hear a little bit more about what your day-to-day job looks like.
Yeah, sure. And Jack, appreciate the intro. I think you know me more than most, so you did a really good job with my background. But just to summarize, I went to Caroline undergraduate in the business school. Outside of UNC, I decided to go into investment banking, and I would say maybe this was kind of a product of going to undergraduate in the 2012 to 2016 time frame where 50% of the kids went investment banking and then the other 50% went consulting, and I decided to go investment banking. um, so that's what led me to Wells Fargo and their power utilities group, and the reason why I went there is because they were one of the banks that started well, they actually had a noticeable footprint in renewable energy at that point in time. There weren't many banks that I saw really heavily involved, at least in the US, on the investment banking side. Since then, it's changed. Every single bank has a group specific to renewable clean tech. It's all merged in with energy power. Yeah, I think it's a major focus for banks. But it was a really good experience having worked there for a little bit. I kind of went through the analyst grind of just building out technical skills. Um, and after leaving that, I decided I want to be in the industry. And the best way to do that was to go work for a company like Strata in North Carolina, which was home for me. And I thought Strata was a really good opportunity because, like Jack said, it's a vertically integrated business. So it's not just a developer of renewable energy assets; it's also a EPC, so a construction business. So they build assets. We develop projects across the country in 25 different states, both photovoltaic utility scale projects as well as grid scale battery projects. And then we also own assets. So we have our own IPP where we own about a gigawatt of projects, largely in the Southeast, and that portfolio is growing quickly due to how big the projects we're building are at this point. In 2017, when I joined Strata, the average project size that we were building um, and owning in the IPP was about 5 megawatts. So for a frame of reference, that's like 40 acres of solar panels. Since then, our average project size has scaled to 250 megawatt plus, and that's over 2,000 acres. And since then, we've started developing uh, utility scale battery projects, largely in the desert Southwest in Arizona and CAISO, California. And those projects come with a lot of scale. So average project size for that is going to be like 100 million plus per project for CapEx. So the most recent project that we financed and closed was a $650 million asset, just one project. So
Wow.
the opportunity set has been a really good experience in that like I've been able to work on various projects of different technologies and sizes. But then leading the capital markets group, which I'm responsible for, I get to touch a lot of different things outside of just project finance. So instead of just raising your typical non-recourse debt, tax equity for building and owning projects, I'm also focused on capitalizing the business. So I'm responsible for managing all of the banking relationships that we have for the company, which can be 20 plus different banks. We have a corporate revolver that constantly needs to be managed. Um, when it comes to financing riskier sort of assets, you can raise development loans or mezzanine finance facilities. There's equipment financing that we put in place. I think there's a wide variety of different structures out there. And since the industry has grown, there's more and more offerings across the different banks. And my responsibility on behalf of the company is finding the right partners on the banking side that can kind of meet the capital needs that we have as a business, and making sure that we're well capitalized to support all the working capital needs, for the day-to-day operations, but then also for future investment into assets that we're developing in our development pipeline. Um, or if we want to make investments into our EPC business or our construction business or our operation maintenance business, that's all super capital intensive. So that it just requires us to raise a lot of capital at the corporate level. So I kind of touch every part of the business, whether that's corporate capital raising all the way down to the project.
Awesome. Yeah, thanks for that overview. Matteo, turn it over to you if you want to give a little more
Yeah,
color.
sure. So to some color. So as you can guess, originally from my accent, so I was born and raised in Paris for me, and I went to business school in France. I was in Nantes for the one that knows it. That was at Audencia, and I had the opportunity to start a first internship at BNP Paribas Group. So BNP is a very large European bank. Is around, I guess, right nowadays 185,000 people. So it was the largest one in Europe. I'm always saying for Americans, it's like the a small JP Morgan in a way on that,
Mhm.
but it's still the largest one in Europe after HSBC to give you some scale. I started my career mostly on the tech side. I was, in the IT department looking at innovation and technologies, and I guess the 15 years at BNP, I was always in kind of innovation, startup, tech world. To fast track and coming to the sustainability path. So I moved back to the US 10 years ago in 2015. So I was deputy head of this innovation unit that was called latterly or C.Lab. Historically, that was doing three things. One was advising BNP Paribas business lines. So it could be retail banking, investment banking, commercial banking on new fintech, new financial technologies innovation. And for the one based in San Francisco, you might know it, but BNP at the time was the owner of a Bank of the West. So it was a large regional bank. And almost by accident, but Innovation Lab in the US was based in San Francisco too. And like 3 blocks from us was the headquarters for the regional business unit. So ironically, I was advising the headquarters on what's going on in Silicon Valley in the US. But practically speaking, we could also do pilots or commercial developments with the with the commercial bank. Bank of the West, to give you some scale, was 80 billion of assets at the time, or what we call a regional bank in the US, top 20 banks, very small compared to Wells Fargo still on that, but was very big into agriculture, for example. We're starting to do some clean tech, etc. And so BNP was probably at the time already one of the largest green finance bank in the world, actually doing green bonds and different stuff. So sustainability and investment in renewable was something that was definitely core to the bank. And so they were pushing that to the American subsidiary in a very strong push. And so my role was in two stuff. I would say one was advising the bank of what's next. In Europe, to give you some ideas, BNP is probably one of the largest financier right now of electric vehicle. They are financing consumers and fleets for electric vehicles. They are financing heating pump deployment, gigafactories, so any type of asset from residential to large scale stuff. And my role was to identify what are the new, almost financial engineering, what are the new way to do consumer loan, leasing, any type of equipment financing, all this kind of stuff, looking at the US kind of innovation on that. And the second part of my role, which will lead to Cathay right now, was historically doing advisory, so consulting work to make it simple for the audience, for large corporate clients in different sectors, which are mostly transportation, constructions, and energy space. So my role was to do startup scouting for them in the US, so looking at new innovative model on that. Mostly, I would say Series B type of startups. So, teams that are 30, 50 people that are maybe doing a few million revenue and want to scale. And so I was advising the large corporations that are looking at these smaller startups in a way to do like, from pilot to acquisition in a way. So looking at what are the options to work between startups and corporate. and we'll develop later during this call. But for Cathay, so I joined Cathay 5 weeks ago, so it's still pretty new for me. It's one of the largest European VC funds that has a strong presence in San Francisco. We have a team of 9 people here, and my role is still to advise large corporation and LP, so what we call limited partners in the VC world, looking at, historically ticket size for us into startups is like 10 to 20 million in Series B, so it's kind of early growth, we call it. But I'm also looking at, still early stage or later stage. Something I didn't mention, but I will finish with that, and after, like, I'll let you for the second question. I was also, and I'm still technically the venture partner for BNP Paribas Climate Tech Fund. So BNP itself at a 150 million fund doing Series A, B investments, climate tech in a broad sense, energy, mobility, building and real estate environment, I would say, and food and ag. So we're doing both in Europe and the US, ticket size 3 to 5 million into startups that are, early stage at that point to help them to scale and to get access also to either Europe or to large corporation in general.
So yeah, thanks, Matteo. It touched a lot of different parts of the ecosystem there. And I think that's an interesting part of the discussion here, right? Is we refer to it as the industry, right? Clean energy, climate tech, but really that encompasses a lot of different things and is, I would argue more broad than most industries that we refer to. And we kind of have two different lenses to that, right? We've got kind of the innovation, venture, ecosystem side, and the project development. And I think they both come with unique challenges, but I'm imagining there's some overlap in trends. So I think it might help just for the audience if I can ask both of you to kind of help frame what you do at a high level. Maybe Alex, starting with you, can you just walk through? You mentioned that you're raising capital for Strata at the corporate level, but also there's project finance going on. Like, what's the different types of capital that Strata's working with? And then how do you think about separating it, between what activities you need to do for business development, and then what activities that need to happen for each individual project.
Okay. Yeah. So I'll start with maybe the project finance side of things and work our way up. So our development team, when they're developing assets, so they look across the various markets, they'll sign up land positions, they'll do all the permitting, all the entitlement work, they'll work with the ISOs and uh, try to secure interconnection rights for their assets. At that point, once they have interconnection secured, and they can sign what's called like an offtake agreement where they're selling the energy to a power purchaser. So that could be a corporate offtaker like a Microsoft or Facebook, or it could be a regulated utility like PG&E or Southern California Edison. And once the contract is signed, that's kind of when my responsibility kicks in. The contract is what really adds value to these assets because it's an obligation for a purchaser to buy all of the energy output of a solar farm over, could be 20 years. And that's what makes these assets bankable and financeable. Um, so once these contracts get signed, my responsibility is to come in and figure out how to capitalize the asset in a way in which basically you can have the cheapest amount of money outstanding for the longest amount of time. That's really, I would say, the crux of project finance. The way that we're able to be competitive with, some of the larger, players in our industry, which are, the next era is a lot of the actually French utilities like the Engis, right? They have low cost of capital where, they can finance projects on balance sheet. Whereas companies like us, we don't have billions of dollars sitting on our balance sheet. We have to raise off balance sheet financing through what you call non-recourse project finance. So when I'm looking at either a storage project or a solar project, I'm reaching out to the various commercial banks that we have partnerships with, and they're underwriting the contracted cash flows of the asset. They typically can lend 50% of the total, like the total cost to build Um, in terms of underwriting, they're underwriting like contracted cash flows, like a 1.2 debt service coverage ratio. And then they're pricing above the SOFR or the base rate. So that's roughly 50% of the CapEx. And then everyone here is probably aware of tax credits, right? So company like ours, we can monetize tax credits because we have tax liability, but we can't monetize hundreds and hundreds of millions per project. So what we do is we partner with banks like US Bank or JP Morgan or Wells Fargo, or even corporate investors that have tax appetite. And they invest into our projects in exchange for the tax credits. And then they also monetize a lot of the depreciation from those assets. So that's roughly another 30%, sometimes 40% of the capital stack. And then the rest is sponsor equity. So it's equity that comes from Strata that's used to fund the rest of the project. And that's typically financed through corporate facilities. So, you know, um, we have a corporate revolver that we use to fund sponsor equity, but then we also fund sponsor equity through retained earnings of the business. So money that gets reinvested back into the business for future growth.
Awesome. Thanks for that overview. And Matteo, I saw you posted a link to the climate cap.
Yeah, I guess, yeah, so I guess, there is two ways to look into it. So historically, and Alex is completely right, all the kind of sustainable finance, or like I would call it, the finance space was started really with solar and wind. So it was what we call, PPA, power purchase agreements of the off-taker, etc. So the practice was very invented in a way 20, 25 years ago and grew a lot with up and down, I would say. And what everyone is trying to achieve right now is this kind of project finance model, which is still pretty big, don't get me wrong, is applicable or not to other type of projects. And that's still like on that. And to generalize, I would say for people that are not finance people or not finance background. So when we talk about PPA, I think we discussed it, cost of capital, if you're looking at a project for 10, 20 years, that matters a lot. Actually, it's a cost of capital, what is the rate basically you're doing your loan. And so the cheapest one historically is bank loan, etc., because it's a cost of capital that is cheaper, but is the hardest to get, and you need to have a very big maturity for technology, very predictable in a way, in the way to do it. And after you have a lot of optimization to tax equity and different stuff like that. Equity as a cliche, I would say, if you're raising with VCs and some people, it's easier to get, but it's coming with a string attached. It's cost of capital that is very high, and expectation for financial return are very high too. So it's kind of more risky. So what I'm sharing, on the climate capital stack, it was more from a startup perspective. What kind of source of funding, if you like, you could have from debt to equity to non-dilutive investment, grants, etc., which matters a lot for startups. At maturity level, to make it clear, is not VCs that are financing very large stuff. So you have private equity firm, some other asset managers that could be in the balance, and at the end of the tunnel, I would phrase it like that. It's banks or even like very large players, the KKR, etc. of the world that could play. But in between, it's very subtle. We call it in the jargon, I would say, is the financial stack. So you have different, like in software, you have different layers of different people, and the more you've sophisticated, the more it changes. And from a San Francisco or startup background perspective, the issue you have or challenge right now, very, very few people make it to basically grow startups with $1 billion of assets. So it happened in the solar space, it happened in the vehicle space, but not that many people had this journey. And as you're scaling from a very early stage startup that is raising money with VCs, some maybe grants, like some grants or whatever from the DOE, etc., as much as they are looking to grow bigger because they have factories, they have assets to finance. It's a very different game. You need to have very I would say experienced people in the finance or investment banking world in general, project finance, and this kind of mix in the middle is not too easy, I would say. So that's one that. And last one I will comment for the one that are looking at this space. Bias probably I didn't invest into them. I know them well, but it's a company in San Francisco called Generate Capital that Alex probably will be familiar to. For me, I'm always saying, Silicon Valley Bank kind of invented the venture debt product. So what, startup were doing with venture debt, generate capital is almost inventing kind of product finance 2.0. So they are taking with a product finance background, but applying it to different asset classes or different type of assets. More risky than banks, not too crazy, I would say, for stuff that are not mature enough. But they're probably doing something that if people are looking in the space, at least look at the way they are doing it or what type of assets, I think is very interesting. And I will put the link in the chat too.
Yeah, awesome. Thank you. So now that we've kind of talked a little bit about the, different ways that capital flows to different types of projects and companies in the space, what are you both seeing as the biggest challenge right now in the industry when it comes to raising capital or ensuring that, your company or your project has the financial backing it needs to succeed?
Um, I think right now the biggest challenge that maybe companies that in our industry have to deal with, specifically like maybe earlier stage startups that don't have a track record, is access to tax equity. The industry is growing so rapidly. A lot of that was spurred by the IRA, but it really was hockey stick growth for the past 10 years. And over the past few years, I would say the amount of projects seeking the same capital pool. So the tax equity pool in the US is roughly around 20 billion a year that gets invested by corporates and banks into renewable energy projects to harvest tax credits. Um, that pool hasn't really grown enough to meet the needs of the amount of projects seeking that capital. So when you talk to like a lot of the large tax equity investors, they're they're really selective with which projects they invest in because they can be, it's the laws of supply and demand, right? So like they will turn down 10 projects for every single project that they finance because they can. So like they're going to look for high credit, good off-taker, strong developer, with track record, with execution capabilities that have been proven in the market. They're going to want to make sure that there's a good construction company engaged to build out the asset. They want to make sure that there's a strong O&M business that's going to maintain the asset over the asset life. They're going to even vet the management team. Um, I, I I think banks are becoming way more selective with who they work with on the tax equity side. On the project debt side, there's more than sufficient capital, I think, to meet the growth. Um, so it's really going to be a matter of getting corporate investors up to speed on what tax credits are. What the IRA allowed was a transferring of credit. So like banks can invest into projects and then transfer tax credits to buyers on the back end, which I think created a new avenue for new investors in the space. It kind of created like a market for tax credits. So, companies of all sizes could invest in projects, and I think that's going to create the supply of tax equity we need to grow. But that's just going to take time. And then I would say the last major challenge is going to be just the uncertainty that the US government poses on our industry. Um, there's always the looming tariffs that we have to deal with, and every time there's a new administration, there's more headaches associated with that, and there's uncertainty with, you know, are that what's going to be tariffed, how are tax credits going to be treated? Are there energy community adders or domestic content adders that are going to be, taken out of the IRA? Like it's just we call it the solar coaster, where every administration has a different view on renewable energy, and like the companies that survive are the ones that can adapt, and the ones that are nimble and well capitalized. But yeah, I think just uncertainty with the policy framework is going to be a major headwind.
Yeah, Alex, I feel like we have this conversation every 4 years. We're just
Yeah.
non,
Yeah.
nobody wants to sign on the dotted line for financing a project when, the cost of panels could swing 40% one way or another just a
Yeah.
few months later. So that uncertainty Tying it back to economics class, the uncertainty can kill a market, and tying it to your policy class, you can see the intersection of policy and its effect on decision making in the financial and business world. So
Yeah.
yeah, it's a good highlight. Matteo, anything else you want to add to kind of the biggest
No, no,
challenge?
I think what to complement. So IRA play a big role in a positive way, but with the uncertainty that is coming now is what will survive or not on
Yeah.
that. Second factor, I think that people also in the industry like felt the pain. It was a cost of capital or like interest rates were very low, and the fact that 1, 2 years ago they doubled down. You can imagine, on 20 years is like mortgage. If the cost of capital doubling, it means like the cost of the project actually is like doubling over 20 years. So it was like something that is maybe like a few percentage, but actually on projects that are 10, 15, 20 years timeline, it's a very big difference. So I think that was kind of, a plus one, I would say, for IRA, minus one for interest. I think we're right in this cycle that many large startups are, Silicon Valley, I would phrase it like that. On the venture capital side, people learn their lesson from clean tech, what we call 1.0. So VCs don't want to finance in the hundreds of millions or billions, like factories and and different project deployments. So on that, in the meantime, what Alex was describing, still banks and many, some extent, large banks and players are not willing to invest or finance assets they don't really understand yet. And so you have this kind of interesting stuff in the middle that is too large or too complex, I would say, for some VCs to finance, but still not too boring, I would say, as technologies for banks to be comfortable with it. And so you have this kind of stuff in the middle that everyone is telling you is a good market, but it's a lot of uncertainty. Anyway, if you're good at what you're doing, you can focus your billions on the renewables and stuff that you really understand. Maybe geothermal will start, some of the stuff will start to be in the tech maturity because it's very easy to forecast. And you have to describe, Alex, that most of the revenue stream right now are sometimes coming from tax credits. You could have sometimes also carbon credits and some of the stuff like that. The issue of this kind of stuff is additional revenue stream, which is good. The bad news is if you cannot factor them in for the next 3 to 5 years, or you don't know exactly what will happen, it could play well in your favor, but you cannot really, any banks will like, we don't know if it's still good in 5 years. So, and that's so I think, it's just a question of timing. I will not discuss politics today, but in a way, we could assume some stuff will survive anyway, and it will maybe not label it either way or green, but it will be labeled differently. It's just the question is uncertainty because no one exactly is expecting when and what. And also specifically to the US, you have also like what we discuss at the federal level, but you have also the state level that is also adding some additional good news. You could have subsidies and stuff. Bad news is federal and state are looking at each other right now to say like who is doing what and so on that. But to be clear, like states, California, Texas, like some states, because of regulatory push or subsidies, are also playing a very large role in the deployment of this kind of technologies.
Awesome. Thank you both. Want to shift gears a little bit to kind of talking about what skills, you all apply in your careers and your day to day. I think one thing that drew me to this industry was that, there's a pretty large technical element, right? Like energy is complicated. It's a complicated industry. When you layer on climate tech and start looking at other forms of decarbonization, then you're looking at mobility and you need to understand those systems. You're looking at carbon capture and you get all of these like pretty technical things that you have to understand to a certain degree. And I think, I think that can be intimidating sometimes, like for somebody that doesn't have any background in that part of the industry. Maybe they know finance a little bit, but don't know any of the technical elements. I guess, curious to hear from both of you on how you think about kind of balancing your finance knowledge from business school, that background, with the more technical sides and nature of this industry. What learning that was like for you, and how you either enjoy that or how you think about that in the work that you do. Matteo, maybe we can start with you.
Yeah, so I think you're completely right, and I think modestly, I would say no one can have the knowledge of everything. You cannot go from experts in nuclear power to doing some stuff in mobility or building. So I think in the space kind of industry that people are acknowledging, you cannot be expert in everything. Ironically, if you have a good expertise in some areas, finance could be one, it could be a specific one. It's actually a valuable skill. So I would say don't be afraid, and if you can multiply, finance in energy, energy operation, role, etc., the more you have like different type of roles and or industries, ironically, the more it's interesting. To give you some ideas on most of the consulting work I've been doing for the 3 or last 5 years, it's very not boring, but very interesting. Is I'm advising large car manufacturers on what is the energy market because they're like EVs basically are energy stuff. So very naively, one of my assignments was for large Japanese car manufacturers. What is the energy landscape in the US? What are utilities? Where we should put the innovation lab for energy? Is it San Francisco? Is it California? Is it Texas? Is it other way? So ironically, it's kind of 101 for energy for that. Ironically, I advised oil and gas slash large utilities or energy players are like mobility will play a large role for us because it's EVs. We have no clue who are the car manufacturers, where they are in charging station. We still need to communicate with mobility. So you have a lot of cross sectors. I'm always saying, any energy stuff is linked to mobility sometime or buildings. It's still like infrastructure. You need to physically have on that. So it's very physical in a way. And so if you're playing a role in between industry, I think that's one. Secondly, ironically, even if sometimes, especially in business school nowadays, in IB or investment banking or commercial banking is not as sexy as it used to be. Ironically, in that world, it still matter a lot because people need to understand how you're doing, Excel spreadsheet forecast, how you assessing risk. Because for most of the startup success, yes, you need, founders with amazing background and developing new technologies, but for most of them, the issue is less the technology itself, it's the deployment of technologies, and it might be very boring, but deployment of technologies is very linked to the financing aspect or how you successfully fundraise and or doing project finance. And I could tell you, even myself as a looking at the investments hat right now, if you're looking at Series BC startup and they don't understand deployment of technologies, require a strong CFOs and financial background team. They will not be able to deploy because even if they find project or clients, if they don't know how does it work, they will not be prepared basically for growing fast. And so that's something I think that finance background, ironically, I'm not saying it's doing a comeback, but it's not something that you could, it is something actually that could be very valuable. And especially if you applied finance in renewable and stuff, because don't get me wrong, like no one did 10 years ago financing of, sorry, batteries and long duration storage. No one was doing that 10 years ago. So the only people that have some skills in the game is people that did energy 5, 10, 15 years ago that are trying to apply this kind of skills to new assets. But no one was doing, power financing 10 years ago. It was basically not existing so much. So that's something I think, don't be afraid that even if it's new technologies, the way or mechanism, especially with finance, I'm not saying it's the good or new old stuff, but you could apply your skills actually very easily, and it's something that even startups or players will favor a lot.
Yeah, I know that's something that I've thought about and talked about with a variety of people for a long time, right? Is all these different companies in the energy or decarbonization climate space, like they all need accountants, they all need lawyers, they all need a CFO and a corporate finance team. And there aren't a long list of people with decades of industry experience in those very specific roles with that energy background or that mobility background, right? So I think it is a really good industry to take a skill set that you have, apply it on a new lens, and there will be a technical learning curve, as there is with any industry. There's a language to learn. There's probably too many 3-letter acronyms thrown around that you've got to get up to speed on, but that there's a lot of opportunity there. Alex, anything to add about kind of that intersection between the tech, the technology, the hands-on nature of it, and the finance world from your perspective?
Yeah, I mean, when I went to an undergraduate, like there was no technology classes related to clean tech, renewable energy. So I just had to learn everything through my day-to-day work. And I think what I realized that at least for my role being very deal specific and motivated, and that like, we want to finance a project. It's a deal. You bring in consultants, you bring in lawyers, and you put a contract together, and you have a model, and you have to get the banks comfortable. Um, what's really important with understanding technology is understanding risk, because that's what banks do is they underwrite risk. So if you can understand the technology better, you can better communicate to the banks what the risks are, and get them comfortable with financing your asset. So, and in addition to that, it's also how do you take a new technology, let's say, you know, lithium ion batteries 15 years ago. Like, how do you take that technology and translate it into a financial model that an investor can underwrite? And then how do you take that model and translate it into a contract, and make sure that there's the right amount of risk allocation between the investor and the borrower. I think understanding the technology is kind of like the foundation for that whole stack of deliverables required to close a transaction.
Yeah, sounds like a fun challenge. Hopefully, some people on the call agree. So I guess want to look forward a little bit. What's one thing that has got you both excited, either something that you're working on or something just an industry trend that you're excited about, or something that you're looking forward to over the next 5-ish years with your company and your role?
Okay, do you want to go first or?
Go ahead. Just start, Alex. I will follow. Don't worry.
I think what's really exciting about the renewable energy industry right now is the demand for not just renewable energy, but just for power. And I think that like solar and batteries are competitive with gas and coal, um, on a standalone basis. I think if you remove subsidies across the board, I think that would be a level playing field. The subsidies that do exist for our technology kind of just brings us up to par and makes us competitive. Um, I think the demand from AI is going to be a huge catalyst for growth in our industry. And the demand is so high that the projects are going to be even larger than what we've seen over the past few years. And, like I mentioned earlier, our project size started at 5 megawatts to like a 5 megawatt $1 million project. And the most recent one we closed was like a $600 million project. We've got projects in development right now that are going to cost 2 billion for one project to build. And that's like 1.2 gigawatts of batteries plus 1.2 gigawatts of solar in the desert in Arizona. So there are these mega projects that I don't think we would have ever thought would have existed 5 years ago, looking in the future. So I think that's what's really exciting is how big these projects are getting. Just this year, there was a large transmission line that uh, raised $10 billion to finance. It's the biggest deal ever closed in our industry, and I think that that's one of many in the pipeline. There's much bigger companies than Strata in our industry, and a lot of utilities that have mega projects that are in the works. And I think it's going to be a lot of fun to figure out how to put together financing packages for something like that.
Awesome. Yeah, I think it's something I talk about frequently. In business school, we learn about idiosyncratic risk, right? And you think about energy and the energy market, like no matter what's happening with the rest of the economy, we're going to continue to use a lot of energy, and we need to figure out a way to get that system as clean as possible. And so I think there's there's going to be changes with the IRA. There's going to be changes with the incentives and things, and certain technologies are going to have one step forward and two steps back. There's going to be ups and downs, but generally there's cause to be excited about, what we need to do in the industry. Matteo, anything you'd like to add from your perspective?
Yeah, sure. I guess so. One, I'm sharing a lot of things, so I guess people could read it later. But I was at the PG&E in California, like Innovation Day, like a few days ago. So it was 2 weeks ago, and they did actually, it's public information. Like they shared their strategy report. So what in terms of R&Ds are looking for the next 5 to 10 years, and they have like 70 different challenges. So, for anyone interested in the energy space, is a great document. It's like very long, it's 200 pages, so you don't need to read all of them, but it's giving you the idea of the stuff that one of the largest utilities in the US is looking after, and that's that. I think to think what I'm very as a VC hat, I would say very, very biased, but anything that is involved with technology intersection with AI right now is something that is very booming. So if you're looking at technology deployments, a lot of topics for incumbents with how artificial intelligence can help to monitor, predict, optimize the existing assets. To give you one concrete idea, so Cathay Innovation, so to do some, I would say, 1 minute advertising, we just invested in a company called David Energy that is doing, what we call demand energy response. So one of the sexy, I guess, area of development. So it's looking at the utility, how you could, for residential and commercial, use different assets. Could be, like batteries, thermostat, solar panel, different stuff. You could optimize the demand energy. And based on that, you could cashback, as I give some cashback, if you like, for the consumers or the users. And there is a full play after on the energy market in a way itself on that. So that's the kind of stuff as a venture capital firm we are looking into, is like what's the future looks like, and is there is company we are thinking could make a huge difference in that space. We want to obviously as an EVC pick the winners or one of the winners. But I think generally speaking, like especially in the US, energy curve, demand will grow because of AI, in front of EVs, etc. So there will be more deployment, more technologies, and more stuff needed. Maybe with my European, I would say, hats, stuff around sustainability, decarbonization, etc., might matter more in some part of the world, I would say, than others. Still, especially for the one living in California, the state of California has a very clear net zero ambition for transport, for heavy industry, etc. So that's also something that you will see a lot of investment focus on, etc. I think that's the second one. And look, I think the good news for everyone is the industry was very small. Say, beyond the renewable, it was very small. Outside of that, to be fair, in the last few years now, there is a few new world, I would say, of larger startups, even Teslas of the world, etc. Oil and gas players are starting to play some roles into this space. And so there is a lot of, you have more opportunities than I would say what you can chase. So it's in that. So in a way, also for students, it's always like which one is the best, etc. Just start with one you like or not, and if you need to change in 1 or 2 years, just do it. But at least get exposed to what you think you will want to do in the next 5 to 10 years, and whatever direction or angle could be investment banking, could be at the startup level, could be the project finance. You're not losing your time in a way to have different angle for the same topic is something that will be valuable anyway in your career.
Yeah, and piggybacking off of that, what entry level roles or roles in your different parts of the industry would you recommend for students or people thinking about a pivot? Places where you might get to touch different parts of the industry or learn quickly. What advice would you give to an MBA student on how can they leverage their recent degree into getting into this industry if they're interested? And Matteo, I'll start with you.
Yeah, sure. So I guess, the traditional one, what you as Alex was describing, but still, consulting and or investment banking, I think it's still valuable and you have very good skill. And you can, have for the what we call renewable practice. Sometimes it's called green economy. There is different wording in different banks and stuff, but you have one that's even new. And ironically, it could be investment banking, but I think even commercial banking sometimes is less sexy. But ironically, it's very like at the size of scale right now that is probably needed. So you could find a good way on that. The other extreme, I would say, would be startup world. Is always tricky sometimes for MBAs. I like, if I want to do a decent salary, startup is paying or not. So it's on that. But startup in a way could be very small or to the Sunrun or Teslas of the world in a way. So, some are not anymore startups, it's large companies. So I think working sometime in the larger company could be a way. Also, one is to consider that people don't really know when they're in business school, but any large tech company, think about Amazon with AWS, Microsoft with Azure, they are all deploying technology for different industries. So if you're making your way, actually, they're hiring tons of people and they love to have people with the structure background, meaning consulting, strategy consulting, investment banking, project management. What Alex was describing, just in the project finance world, you could see there is 8 different stakeholders, and you have a lot of coordination to do. And so, ironically, the business skills are very adapted in terms of soft skill. People are sometimes afraid. That's my last point. Are very afraid sometimes saying, it's very technical, etc. I don't have an engineering background. What they will do with me? Ironically, like don't try to compete on the tech savvy or tech knowledge. Ironically, your skills that are more like soft skills, finance, etc., could be very big assets. So don't be shy, I would say, of any experience, especially if you're an MBA student. You have past experiences before. Yes, you need to do a transition saying that no, I was in retail, I was in other space, but what I learned there and what I did with my MBA is applicable. People, there is, to be clear, there is not enough finance people or people with business background in that field. So by default, the industry needs to hire beyond the traditional energy play. So don't be afraid of that because on that end, the last one I will put in the chat too, but you have a lot of circles. One I'm running in San Francisco is called, we're hosting a lot of events for students and new, I would say, workers or people looking to transition. It's called My Climate Journey. So it's a community of 4,000 people in the US. It's not just in San Francisco, there is in New York, Boston, etc. But if you're looking more as a startup world or operators, I will put it in the chat, but you have a nice, I would say, you have a few, not just MCJ, but you have a few communities in the Bay Area and other way. If you're looking for ideas or people that are recruiting or role, it's more startups, to be clear, but that's something that could be interesting for some of you.
Yeah, me too. I remember going to one of your hosted events through MCJ last spring. So I definitely recommend it. Anybody in the area or anywhere really interested in connecting with people. It's a great way to network and learn more. Also, people are just constantly posting articles, things they're interested about, sharing the work they've done, highlighting a startup. So it's a great place to dive in if you're interested in the space, but maybe are unsure of kind of what your next step is. I definitely recommend it. Alex, any advice for people thinking about breaking into the industry where you might recommend starting?
Yeah, so I think if you have an interest in finance, I think project finance is kind of the foundation of renewable energy. It all starts with financing a project, and successful companies that can finance multiple projects can then raise corporate finance, right? Um, so my recommendation, and I didn't really know this when, I started working as I mentioned, I went in and worked for an investment bank, which was a really good opportunity, worked on large M&A transactions and large corporate, corporate capital raises. But, there are 50 plus project finance banks in the US alone. And there's actually a lot of European banks that participate in the US, like BNP's one, there's Natixis is another one. I mean, you've got Santander. There are multiple opportunities on the finance side, and I think those groups are growing really quickly. If you want to be in finance in our industry, I think you're going to get the best like repetition working at one of those banks, and working on actual projects, which I think that's something I kind of missed out on when I worked at an investment bank. Was it's all corporate, high level, but you never really get into the project, and I think that's the experience I kind of missed early in my career. If you're not interested in finance, but you're super interested in solar or batteries or something utility scale related, I would say maybe go work for a developer. We have a sizable development business at Strata, and the way I describe it to people is each of these developers are kind of trying to raise capital for their own little startups. So like they're developing projects and they have to create a thesis. They have to figure out where to site the project. They have to come to our investment committee and ask for capital allocation, and they have to pitch, the senior managers for why, balance sheet should be allocated to their projects versus other projects in the pipeline. I think that's a really good experience because you kind of cover um, the pretty interesting life cycle of an asset is like the origination all the way through contract origination, signing contracts. and then taking it through like construction. Um, so yeah, I think development's another really good place to start as well.
Awesome. Yeah, I think that's great advice. And there's a lot of developers, and there's a lot of capital interested in developing clean energy projects, and there seems to be more and more developers spinning up every day, it feels like. So I feel like there are a lot of opportunities in that space for people who are interested. Um, do have a quick audience question before I get to my last question for both of you. Alex, I think this one's more geared towards you. In terms of project financing, what's a green flag and a red flag you look for in a project?
Uh, Market and barriers to entry. When we're looking at a lot of projects that we want to acquire for our pipeline, a lot of times you're looking at like your development milestones and whether or not projects have been permitted, what risks are outstanding after contracts have been signed, what do the offtake contracts look like? I I typically try to stay away from highly uncontracted assets in certain markets that have low barrier to entry. Um, it's difficult to predict, 40, 35-year cash flows, unless you have highly contracted profiles. And, there's a lot of developers out there just throwing up projects in Texas and they're going full merchant. And I think that's a very risky play. So those are ones that we've typically stayed away from. I think you really have to start with the fundamentals of like where's your revenue coming from and what does that look like, and making sure that you've got downside protection, right? If if you can't recontract an asset after the first contract tenor, what happens?
Yeah,
Um, so yeah.
awesome. Well, last question for you both. What are the three top skills, try and keep them to, a word or a couple, the three top skills that MBA students or anybody really needs to succeed um, in a role like yours in this industry? And Matteo, we'll start with you.
Yeah, I can start. So I guess continue to be curious. What we describe, there is a lot of new stuff happening. No one has a best knowledge. So curiosity, I think, is one. What I would call networking skills, but is not pure networking, is more like be sure, as you're starting your career, meet as many people as you can, even junior or senior level, because if you're staying in this place and I've been now losing my hair, so I'm getting older. Ironically, the connection I built in the US starting 15 years ago or 10 years ago are not finally porting fruit on it, but it's hard to measure that in the first 2 or 3 years of your career because you're very focused on doing what's your role, etc. But ironically, as much as you grow and getting older in a way, what you want to change is the kind of soft contact you did or the connection you need. Yeah, you're not sure that matters a lot. And especially in my world of venture background, what you need really at one point, when you're assessing startup, if you, oh, I know someone at a utility or I know someone at a startup that did something similar, etc. I can, give a phone call or have a 20-minute conversation is something that if you are, not with this kind of connection, it's impossible almost to do. So, curiosity, networking. And after, I guess, I'm always saying for people looking for career advice, do something, yeah, that you would like, even if sometimes you could do some stuff that you don't like because you know what you're doing for, but in a way you will work for the next 40, 50 years, whatever, on that. So at least choose, I don't know what is the best path, but choose something that you think will be valuable for you, either because you enjoy it or it will be something that doing that will make you enjoy more your work on that. So I think sometimes people are, and maybe it's more naive from your French way to do it, but at least because we're spending a lot of time at work, do something that really you will enjoy or something you will try enjoy doing. So, you can do investment banking, consulting, hardworking, etc. But if you know why you're doing it, I think it makes it easier, I would say, in a way, than just doing a job for a paycheck. It's still necessary. Don't get me wrong, but at least try doing the getting paycheck to paycheck, try to do something that will matter for you or you will enjoy beyond the work itself.
Awesome. Alex?
Yeah, kind of to echo what Matteo said, don't focus on money, focus on experience, especially when you're moving into a new industry. Um, for my field in finance, like look for projects where you're getting the most deal repetition, where you're going to be able to work on active transactions. I think that's the best way to learn. So don't focus on your first year salary. I would say go into a job saying I have to earn my salary and I'll prove myself. And if I add value to the company, they'll compensate you for that. And if they don't, they're not the right company to work for anyways. So yeah, I think focus on experience. I think interpersonal skills are super important. Something our CEO always says is you don't do business, you do business with people, not with businesses, right? Like your network is everything, and that's something you'll build over time. But the relationships that I've built on the in the banking sector, I think um, have have made me successful in my career because I know that I can transact on large deals because I have a good relationship with the other person on the other side of a negotiation. And if there are issues that we need to work through, I have the type of relationship where I can pick up a call and talk through it, and it doesn't have to be this adversarial back and forth. And I think that's super important. So yeah, focus on relationships and networking. It's a small industry as well. It seems large from the outside, but once you get into it, like everyone knows each other. Everyone's worked for everyone at some point, especially in like the solar and energy industry. So, don't burn bridges. You might cross paths with someone again. And I think trying to maintain good relationships is super important. And then I think the last one is if you haven't had the opportunity to, take any class on negotiations, I think that's super important. Um, that's kind of once you progress in your career and you're outside of a financial model, like you're just negotiating contracts all day, or you're negotiating deal terms and understanding how to negotiate, I think is really important, not just in finance, but really every aspect of business. It always comes down to negotiating something, right? So if you can take classes in that, I would highly recommend it.
Awesome. I think that's great advice. And I didn't hear you need to understand complicated physics or how, electricity flows through our grid. I didn't hear you need to be a master wizard with, Excel modeling. Like, of course, those things help, but I think you both did a good job of summing up what's really needed in this industry and why I think that, anybody who's considering it shouldn't be afraid to dive in and give it a shot. And we need more people in this industry, right? Like as we talked about tonight, like there's complicated challenges both on the financial side, both on the technical side, and they're not going away. So we need smart people in this industry, working to figure out these problems. And I think, my experience so far, and I think you both would agree, is that there's some fun problems to try to figure out, and good people working on it along the way. So um, you know what, we are out of time, so I do want to thank you both for joining us. And I want to thank everybody for attending. This has been recorded, so for those of you that know somebody that wasn't able to make it tonight or think somebody might be interested, we will send out the recording to everyone who registered, and if you would like a copy of it as well,